Hi, I'm Joe Craig, Interim Director of the UCCS Economic Forum, and welcome to my quick hits for the February dashboard. This month continued with strong economic indicators for the second month in a row. As a quick apology, we don't have local unemployment data yet, as it won't be released until mid-March, but more on that a little bit later. Consumer confidence continued to rise and inflation continued to fall, albeit modestly. Good overall signs. Locally, we saw continuing good news in tourism. Hotel occupancy and revenue per available room are right about where they were in January before COVID, with a 12-month moving average of 67% occupancy and a RevPAR of about $56. It will be interesting to see how high RevPAR climbs as we exit the summer months. New vehicle registration remains low, with only about 1,000 last month. Looking at what we can about the local labor market, posted wages rose almost across the board, with the exception being sales representatives for wholesale and manufacturing and registered nurses, which remained relatively flat. As I said, we don't have January unemployment numbers yet, but given the rising wages across the board, I expect those to be low. This is in contrast to national unemployment, which rose from 3.3 to 3.9% after generally trending down the last year. In addition, the U6, which excludes marginally attached and underemployed, also rose. We may be seeing the start of the slowdown or the soft landing we've been expecting, although maybe perhaps so less locally. We also saw the yearly release of the estimated living wages for El Paso County. Unsurprisingly, the 2022-2023 estimates rose for all categories. In particular, the living wage for households with one adult and who works and two children passed the six-figure threshold to $102,000 or thereabouts. A large piece of this likely has to do with the housing market. The 2022 fourth quarter housing index numbers came out, which is defined as the number of houses in the area that are affordable to a family earning the median income. Colorado Springs came down from 25 to 18%, although in comparing with other markets in the US as a whole, this has been a trend across the board. Unsurprisingly, home sales continued their downward trends, which moved in lockstep with rising, or in the case of the 30-year mortgage rate, rising interest rates. Overall, it's been a mixed bag this month, and only time will tell where we're going. These have been my quick hits. Thank you very much.